As August rolls in, there's a familiar shift in the air. Vacations are starting to wind down, school supplies fill the store shelves, and many of us find ourselves easing back into a more regular routine. Whether kids are heading back to school or we're all getting back into the swing of work after summer getaways, August always feels like turning the page to a new chapter. A new feature to our monthly market updates will be the What's Inside page, a chance for you to get a sneak peek of what we'll discuss in the upcoming video. This month, we'll discuss July's market gains, the bond market holding steady, why the Fed kept rates unchanged, and a couple of questions. Is the labor market cooling, and is volatility ahead? Before we look to the future, let's look back at a very successful month of July in the markets. July brought another month of gains for U.S. stocks, keeping the 2025 rally on track. The S&P 500 continued its steady climb, while the Nasdaq took a bit of a breather after earlier stronger gains in the month. The Dow also posted steady advances, helped by solid performances in traditional sectors like industrials and financials. Meanwhile, international markets showed continued strength. Developed markets in Europe and Asia benefited from easing inflation and more supportive central banks, helping lift investor sentiment abroad. Emerging markets also held their ground, with growth driven by improving economic data and increased demand for commodities and technology. All told, global markets are reflecting a more balanced and resilient picture as investors weigh ongoing economic shifts around the world. Turning to the bond market, July was relatively calm compared to earlier in the year. With the Fed holding rates steady once again, yields really didn't move much, but the bond market continued to show signs of health. Investors are still seeing solid income, especially from short and intermediate term bonds. And even though rate cuts haven't arrived just yet, expectations for a shift later this year are keeping longer term bonds in play as well. Speaking of the Fed, they met again in July and, as expected, kept interest rates unchanged. It's another wait and see approach as they continue to monitor inflation and economic data. The message was clear. Progress is being made, but not enough yet to justify a rate cut. They're staying cautious, which isn't a bad thing, but some are starting to wonder if they might be waiting a little too long to act. One of the major pieces of the economy the Fed is watching is the labor market. Think of the labor market as a campfire that's been burning strong for a while, throwing off plenty of heat and keeping everything around it warm. But lately, the flames have started to settle. Last week's jobs report showed fewer new logs or jobs being added to the fire than expected. And when we look back at June and July, we realized we had overestimated the size of those logs or jobs as they were smaller than we thought, meaning the fire wasn't burning quite as hot as it first appeared. Now, the fire's still going. It hasn't gone out, but it's not blazing the way it was. And for the Fed, that's not a bad thing. A slightly cooler fire means less risk of overheating the economy and more reason to consider rate cuts down the road, maybe sooner rather than later. Now, as we head into August and September, it's worth remembering that these 2 months have historically been a bit tricky for the markets. Volatility tends to pick up. Trading volume thins as some traders take vacations, and headlines could move markets faster than usual. That doesn't mean we're due for a downturn, but it's a reminder that market pullbacks, when they come, are a normal part of a healthy long-term movement in the market. As always, my team and I are here to help you navigate all the moving pieces. If you'd like more timely information, you can always visit the Insights and Resources page at ccmg.com for the latest from Clark Capital, or catch Bulls and Bears with Herb Morgan on YouTube for expert commentary from Cantor Fitzgerald's Chief Investment Officer as he breaks down the markets in plain English each week. Before we wrap up this month's video, we have a special announcement from our intern, Luke Thomas.
As I wrap up my internship here at Orion Wealth, I just wanted to take a moment to thank you, our clients, for the opportunity to be a part of your financial journey this summer. It has been an incredible experience, learning from the team and seeing firsthand the care and dedication that goes into serving you. I'm truly grateful for the experience. Thank you.
So, as we head into dog days of August with markets steady, the Fed holding the line, and the labor market's starting to cool just a bit, we'll continue keeping a close eye on what it all means for you and your financial plan. Thanks as always for spending a few minutes with us. We're grateful to be on this journey with you, and we'll be here with you every step of the way. Wishing you a smooth and successful back to school season.